Hey everyone, and welcome back to the Tesla Stock Podcast. There's a massive tug-of-war happening with Tesla right now. The company's core business is flashing some serious warning signs, but the stock itself seems to be living in the future. With Tesla currently trading around the $315 mark, we need to unpack this growing disconnect between today's reality and tomorrow's promise. Let's get into it. First up, let's talk about the elephant in the room. Tesla's core business of selling cars is struggling. The company just reported its second quarter deliveries, and the numbers confirmed a worrying trend. Tesla delivered about 384,000 vehicles, which is down 13% compared to the same period last year. This isn't a one-off issue. It follows a 13% year-over-year decline in the first quarter as well. In fact, 2024 was the first time Tesla saw an annual drop in sales since 2011. The big reason for this is competition, especially from Chinese automakers. In Europe, for example, overall EV sales were up 26% in May, but Tesla's sales plunged by 40%. It appears that consumers are simply choosing cheaper alternatives. China's BYD just launched its Dolphin Surf EV in Europe for around $23,500. Compare that to Tesla's Model 3, which starts at $50,000 in the same market. Tesla simply cannot compete on price, and it's losing significant ground. Personally, I think this puts the stock's recent strength in a very strange light. The foundation of the company, which accounts for over 70% of revenue, is showing cracks. So if sales are falling, why is Tesla's market cap still hovering near $1 trillion? That brings us to our second segment, the massive bet on the future. The entire bull case for Tesla is no longer about selling cars. It's about the futuristic vision of robotaxis and humanoid robots. CEO Elon Musk believes these ventures will make Tesla the largest company in the world, and investors are buying into that story. The goal is to have millions of autonomous cybercabs on the road, generating revenue 24/7. The investment firm ARK Invest believes this could be a $756 billion a year business for Tesla by 2029. But here's the reality check. The recent launch of the Robotaxi service in Austin, Texas, is leaving a lot to be desired. The cars are geo-fenced to a tiny area. They require a human supervisor in the passenger seat at all times, and there have been reports of messy performance. Meanwhile, Alphabet's Waymo is already operating a fully autonomous, unsupervised ride-hailing service across 4 U.S. cities, completing over 250,000 paid trips every week. This means Tesla isn't just trying to build a new technology. It's trying to play catch-up in a race it's already losing. This really is the trillion-dollar question for investors. Are you betting on the company that has a commercial lead today, or the one you believe can scale faster tomorrow using its existing fleet? This brings us to our final and perhaps most important point: the sky-high valuation and the CEO factor. With car sales down, profits have taken a massive hit, plummeting 71% in the first quarter. Yet the stock is trading at a price-to-earnings ratio of over 170. For context, the average PE ratio for tech giants like Nvidia, Microsoft, and Apple is around 35. For Tesla's valuation to simply match its peers, the stock would have to fall by 70 to 80% from its current level. This valuation is pricing in perfection for the Robotaxi and Optimus robot ventures that currently produce zero revenue and face immense regulatory and technical hurdles. Any significant delays or failures in that narrative could cause the stock to correct violently. And you can't separate the company's performance from its CEO. Musk's political stances have alienated a large part of Tesla's original, environmentally focused customer base. Sales in Germany, for example, plummeted after he endorsed a right-wing candidate. At the end of the day, a bet on Tesla isn't just a bet on technology. It's a bet on Elon Musk, And that has become a much more complicated and politically charged wager than it was just a few years ago. So to recap, we have a core car business with shrinking sales due to intense competition. We have a massive trillion-dollar valuation that is propped up entirely by a futuristic robotaxi vision that is still largely unproven and behind competitors. And we have a sky-high stock price that leaves absolutely no room for error. So I want to leave you with this question. What do you believe is the biggest risk to Tesla's stock right now? Is it the growing competition from cheaper Chinese EVs, the slow and difficult rollout of full self-driving, or the controversies and political alienation surrounding Elon Musk himself? Let me know your thoughts down in the comments section below. And as always, if you got some value from this breakdown, please hit that like button and subscribe to the Tesla Stock Podcast.